getting into to Bitcoin.
Yeah.
And even people that have gold stashed away, they still have bank accounts. There's always still some like residual stuff being just kind of opaquely taken from them by this seigniorage, this debasement. Yeah. And so it really just kind of closes the window of all these different issuers around the world for how much seigniorage they can get away with, because they're competing with before they were competing basically with gold. Yeah. Or smaller countries are competing with the dollar. And so they're competing with something. If it's gold case, they're competing with something that grows at 2% a year and is really slow. If they're competing with the dollar, they're competing with something that grows at 7% a year but is pretty fast and usually gives you a yield that gives you some of that 7% back. Whereas now they're competing with Bitcoin that has zero long-term supply growth and is basically as fast as the dollar. And that's a much harder competition to go against. So I think it to the extent that Bitcoin gets another 10x or notably bigger from here and really kind of eats into fiat currency markets more, it really reduces the ability of all these different entities around the world to capture that scale of seigniorage.
Every economic cycle has a turning point at which the appearance of stability gives way to the brittle reality that lies beneath. People begin to realize that living better does not necessarily equate to working harder. On paper, their earnings may increase, but each paycheck provides less stability, less energy, and less food. Lyn Alden, a monetary expert, cautions that this is not a temporary situation. The biggest economies in the world are accruing deficits so great that the only realistic way to move forward is through financial repression, which involves measures that purposefully keep interest rates below inflation and gradually deplete savers in order to repay borrowers. People believed there was no other option, so they tolerated this hidden cost for decades. Although gold provided some protection, it was still restricted to vaults and exchange-traded funds and was not linked to the rapidity of contemporary trade. But the landscape is shifting now. Outside of the established system, Bitcoin has become a digital property that is scarce and immune to political devaluation. Bitcoin is more than just a speculative investment. For more information about cryptocurrencies and the digital asset world, remember to like this video, subscribe to the channel, and enable post notifications if you like this kind of content. Additionally, please feel free to leave a comment below with your thoughts. Thank you for watching and enjoy the video.
When you look at the impacts of inflation in the chapter in your book, like it's a lot more than just economics. So what all do you try to look at in terms of inflation and its adverse impacts?
One is to kind of break it up and kind of point out what it is. So a lot of people, of course, think of price inflation.
Yeah.
I prefer to think of dilution, which is, for example, if you're holding a fiat currency, developed market fiat currencies historically grow in supply by about 7% per year on average. And so even if you're getting a yield, if you're getting, say, 3% or 4%, but you're getting diluted by units by 7%, your share of the network is shrinking.
Yeah.
And then you can think of that as other things. Like, for example, if you own a stock, are you getting diluted or are you getting or some of them buying back their own stock and you're holding up well? So it's often best to think of it in terms of being diluted.
Yeah.
And when you have that kind of foundation, inflation, like, if you look at, say, over time, money supply is growing up by 7% a year, but we are getting, say, every year we're getting usually 2, 3, 4% more productive, more efficient at making things. We see this most readily in electronics.
Yeah.
We see it less so in gold or energy or something like that, like more tangible home building. So there's a spectrum there. And so the other element of that is that basically inflation's a spectrum. And so there are some things that are close to pretty scarce. And so they actually tend to go up in price roughly in line with money supply growth.
Yeah.
And that includes fine art, that includes waterfront property. Sometimes things can go even up faster than money supply growth if you happen to, for example, predict years or decades ahead of time which population center is going to boom, or which artist is going to take off in terms of be the most popular one. But basically, the truly kind of scarce, lindy things, they kind of go up the fastest. Then you have semi-scarce things. So gold, it's increasing its supply by 1 to 2% per year. So if you map out its price performance, it kind of matches. So it's like, if you take into account the dilution, it's, slightly underperforming money supply growth, but roughly in line with its dilution rate. And then you look at oils doing something similar, but even a little worse. When you get into like agricultural commodities, they don't hold up very well at all because they're way more abundant. And then when you get into like electronics, they're outright, collapsing in value all the time. And so you have this big spectrum. And that actually misleads people because they think inflation is measured from zero, whereas really inflation is measured from a negative number because we're getting more productive. So prices, if we had this kind of flat ledger, like a finite ledger, prices would be going down. So even some inflation just gets us back up to zero, let alone positive inflation, which we all experience.
Popular in Bitcoin circles to talk about fiat culture and all of these things. Like, do you think there is a connection between monetary inflation and, let's say, less purely economic phenomenon?
I think there are, because it one, it hurts productivity. And one way to quantify this is, in addition, like, a lot of people focus on savings being eroded, which is valid, but it's also every single contract in society gets impacted by inflation. Like, imagine if you could push a button and every contract in the entire country gets shifted in one party's favor. That's what inflation does.
Yeah.
So if I was running a business making widgets and you're in a retail business that buys my widgets, we don't want to figure out every day how many I'm going to sell you and at what price. You're going to try to make a contract with me that maybe is 6 months or 12 months. And in a stable price environment, we have good foresight into what kind of pricing we're going to do. And but in a highly inflationary environment, we have to now make shorter agreements and remake those more regularly, because neither of us knows what the money's going to be worth in a month or 3 months. So we have to now do more administrative overhead because money's inflating faster. And then that's true for also every single wage earner. Every single wage earner or salary worker is a contract with a company to earn a certain amount per unit of time or unit of work, whatever the case may be. And the government is able to kind of shift that contract. And so that, I think, has really big implications. And I use Egypt as an example because I lived there for part of each year. Their money supply is growing at 20 to 30% per year.
Crazy.
And so if you're operating in that environment, you're earning a wage, you're a small business. And I know wage earners and small business owners there. And I asked them, like, are you getting a 20% raise every year? Are you raising your small business prices to customers 20% every single year? And usually the answer is no. And so they're, even though they're trying to keep up, they're getting kind of diluted in the system that they operate in. And that's what really messes up the social contract.
For sure.
There are other aspects of inflation besides price increases. It is a more profound issue that warps society's fundamental structure. In a fiat economy where governments can produce as much money as they like, inflation reduces the value of money itself, as Lyn Alden explains. The money supply functions as a hidden tax when it expands more quickly than the productivity of the economy. However, inflation's harm extends much beyond individual financial matters. Long-term planning is nearly impossible. Companies are forced to reduce contracts and renegotiate frequently, and institutional trust is weakened. It transfers authority from those who add actual value to those in charge of the money printers. Gold was long thought to be the only defense against this. However, gold is sluggish, needs to be moved or stored by banks, and is still dependent on manipulable processes. However, something new is starting to emerge today: Bitcoin. It can't be printed indefinitely like fiat money can. It is digital, quick, and independent of governments and banks, unlike gold. Bitcoin isn't just another store of value. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
So I think it's by far the best shot we have. I always hesitate to say that it's like inevitable, but basically it's the most credible way we have to get past this period of centralization. So for about 150 years, we've been in the period where, going back to my prior point, transaction speeds were speed of light, physical settlement was still slow. We finally invented fast settlement. Satoshi and all his predecessors finally figured out fast settlement.
Yes.
And then, we're kind of watching that catch on. It has to go through the massive network effect. It's up against the $100 trillion network effect of the dollar, the multi-$100 trillion network effect of fiat currencies globally, the whole global bond market, and all the governments tied to it. So this little open source thing is kind of doing this multi-decade path through this very entrenched system. It's gradually succeeding. It has things to navigate. It had to, navigate big countries trying to ban it and then figuring out they kind of can't ban it. And, politicians realizing that there's nothing to gain really from donors or anyone else, from voters, for being anti-Bitcoin. But there is a lot to gain from being pro-Bitcoin. And so it's kind of going through that game theory over time. There's a couple countries that are ahead of the curve and say, well, if other countries are going to be slow and even anti, we're going to be the ones that embrace it. It still has to go through some challenges, like, if we do have, quantum computers, it's got to be able to make that change, and that has implications for signature types and potentially even block size issues with the length of those new signature types. So it has to navigate still, I think, some challenges ahead, but it's by far the best chance we have, and it's something that it's kind of fundamental. Like, even if society were to rerun this whole modernization period multiple times, kind of like how the bicycle would always come before the car, would always come before the airplane, because basically you kind of have the predecessor stuff kind of built into it. We always would have Morse code before we have something like Bitcoin.
Sure.
And Morse code could be called different. It could have a different alphabet equivalent, but it still is basically Morse code. Right. Kind of like how Bitcoin wouldn't necessarily have the exact parameters it has now, but something like Bitcoin, if you get to this period, would eventually emerge. And I think it we want it to succeed on the first try rather than have to kind of start this project all over again. If you look at some of those older European maps, they'd be a lot more fractured. than what it kind of consolidated into. And I think to some extent that kind of can reemerge in the sense that while governments will, in most cases, in most regions, still exist in various capacities, they have less of just a full control over everything. Like, for example, the full banking system is currently under every country's control.
Yeah.
They can go around that. And they have a much harder prospect of raising capital. Because again, if like Egyptians, going back to that point, 20 to 30% money supply growth is happening, and there's very few ways to opt out of it other than power users getting into Bitcoin.
Yeah.
And even people that have gold stashed away, they still have bank accounts. There's always still some like residual stuff being just kind of opaquely taken from them by this seigniorage, this debasement.
Yeah.
And so it really just kind of closes the window of all these different issuers around the world for how much seigniorage they can get away with, because they're competing with before they were competing basically with gold, or smaller countries are competing with the dollar. And so they're competing with something. If it's gold case, they're competing with something that grows at 2% a year and is really slow. If they're competing with the dollar, they're competing with something that grows at 7% a year but is pretty fast and usually gives you a yield that gives you some of that 7% back. Whereas now they're competing with Bitcoin that has zero long-term supply growth and is basically as fast as the dollar. And that's a much harder competition to go against. So I think it to the extent that Bitcoin gets another 10x or notably bigger from here and really kind of eats into fiat currency markets more, it really reduces the ability of all these different entities around the world to capture that scale of seigniorage.
Does Bitcoin make government local again? Is that the direction we're headed?
It might. I think that the more conservative thing I would say is that it makes it more transparent in the sense that there might still be communities that want more government or want less government.
Yeah.
But at least they generally know what they're getting into. It's like they're saying, like, part of why we run, like my talk here was called Nothing Stops This Train. I was talking about the fiscal deficits. It's because we can't agree on how we're going to balance things. So this error just keeps spilling out as we fail to agree with each other. And in a Bitcoinized world, that can't really happen. There, like, defaults happen before that just runs forever. Yeah. And so basically it says, well, we can still pay for this, but we actually have to tax for it. And so, and taxes are transparent. That's why if you go back to wars in the past, that's why even like older emperors and kings would debase their coinage, because it was a way to kind of go around the transparent tax system.
Yeah.
People revolt over taxes more than they, keep track of the exact metallic content of their coins. So it kind of just reduces the attack surface of how much can I opaquely steal from you?
Yes.
And so then, different places are free to still kind of choose how they want to govern themselves, and there still might be pockets of authoritarianism, unfortunately, but at least that opaque part is a much less viable option.
According to Lyn Alden, Bitcoin has the potential to fundamentally alter the way that money functions in society, because they have authority over the production and movement of money. Governments and central banks currently wield the majority of power. Without having to publicly raise taxes, they can steal value from people's salaries and savings through devaluation of the currency and inflation. This structure has been in place for many generations and has influenced global politics and economics. However, that concealed power starts to fade with Bitcoin. Bitcoin cannot be printed indefinitely, in contrast to fiat money. It functions independently of the government and has a set supply. According to Lyn, governments will be forced to be transparent about their financial situation if Bitcoin keeps expanding and gaining traction, since they will no longer be able to surreptitiously tax citizens by creating a larger money supply. The system would be more transparent if they had to ask for taxes directly in order to fund spending. She also admits that the path for Bitcoin won't be simple. The world's biggest financial networks are being put to the test, and there are still technical concerns that could arise in the future, such as threats from quantum computing. But the concept behind Bitcoin is so basic that it would always finally be created, even if society restarted several times. It's a logical development in technology. In the end, Lyn thinks Bitcoin offers us the best opportunity to create a more equitable financial system. Governments won't vanish, but people will at last have a reliable monetary system that safeguards their hard-earned money and makes it more difficult for anyone, including governments. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.